What's good, future crypto millionaires? A crypto gold rush is getting real close, and I'm gonna teach y'all everything you need to know in order to trade crypto. I'm gonna show y'all how big money uses moving averages as support, resistance, and all that. But first thing first, what the fuck is cryptocurrency? Crypto is digital money that can be used to buy things in person or online. Such as Bitcoin. You can use that at the gas station, ATM, or you can use that to just buy shit online. You know what I'm saying? Digital money, cryptocurrency. Just a brief little explanation. Nothing too crazy. Trading exchanges that I use personally, we got KuCoin. That's how leverage trade, like options and all that. That's what you use KuCoin for. KuCoin, you can do long trading and you can do short trading. Then you got Coinbase. Coinbase is trading basically like regular stock percentages. Let's say you buy Apple high and you sell it low. You know what I'm saying? That's basically how Coinbase is. Just regular percentages, ain't no leverage trading. Just simple trading. Then you got KuCoin, leverage trading like options. Then you got Coinbase, regular trading like Apple stocks, shit like that. Disclaimer, I'm going to teach y'all boys how to trade, not invest. I'm going to give y'all a good list of coins that I trade for crypto, but I'm not invested in it. It's a difference between investing and trading. Trading is where you just get in and get out. Hell no, I ain't in none of these for the long term. I'm just trading these, and I'm gonna tell y'all these certain coins because I like the volume and liquidity that comes with it. That makes it way easier to trade. The first coin I like to tell y'all about is Matic. Matic is teamed up with Visa, MasterCard, and Starbucks. So you know, if Matic is teamed up with Visa, MasterCard, and Starbucks, that means that Visa and the Starbucks CEO believes in the Matic and believes in the potential. So that means it has liquidity. So that's why I trade Matic. Another coin that I've been trading for a long time now is called Gala. I originally started trading Gala like last year, about 2022. But I like trading Gala because it is metaverse impact and how Meta's doing it. So as long as Facebook like Meta keep like boosting shit up in the metaverse, Gala Games gonna keep doing good as a coin. You know what I'm saying? It has great liquidity, great volume. I like Algo because it has an exclusive partnership with FIFA. You know what I'm saying? FIFA is a multi-billion-dollar industry. It's international. So if FIFA trusts this coin Algo, that means I trust it as well. You know what I'm saying? It does have a lot of liquidity. The price has been going crazy lately because you can tell, like I said, FIFA has released that partnership saying it's been with Algo, and it's been doing well ever since. Now the last but not least, you already know I had to mention this coin, Bitcoin. You know what I'm saying? Bitcoin got hella liquidity, hella volume, so all the big banks are interested in. People trade this shit worldwide. Bitcoin is the biggest crypto coin of them all. So of course you're gonna have hella volume and hella liquidity. That's another reason why I trade Bitcoin. Now let's go to fucking trader view so I can show y'all what Bitcoin looks like. Alright, so this is Bitcoin on the weekly chart. First thing we need to do when it comes to trading crypto, we need to find the trend. Very important. And how I like to find the trend, the first thing you want to do is map out your support and resistance. Support is the bottom of the trend and resistance is the top of the trend. That simple, that easy. So the first thing you want to do is you want to grab all the major support and resistance levels. You can't find any support and resistance levels on a weekly time frame. That means you need to work your way to the daily time frame. That'll help you look at the chart a little bit better so you can see what's going on. The price of Bitcoin is over here, so I'm going to stick to around this area. And as you can see, it looks like it's trying to hit this resistance right here. So the first thing I would do, drop me a little box. I start from the top of this to about right here to the lower band. Draw it right there. You know what I'm saying? That's just one way. That's my first resistance level. Cause like I said, resistance to roof and support to floor. This is just a daily time frame. Then I would draw another one like this right here. Yeah, this right here looks like it'll be a good resistance. And since we just day trading these aren't like major lines. I'm just gonna draw a trend line right here. I'm gonna draw a little trend line, nothing crazy. And as you can see, when I draw the trend line, I had multiple touches. It went all the way down right here, came back up, fell down, came through. Do you see? It went up, it hit that line, went down. Then see, as time went by, it came back up, hit that line, went crashing down. Time went by, went up, past the line with this long ass wick right here, came back down, then it went all the way back up. So, just based off of what we have so far, don't be surprised if Bitcoin starts to curl down and hit 26K. But this is just based off of what we have right now. We got way more indicators, we got way more things we can add to the chart to make sure that we are trading Bitcoin the right way. Now that we have our support and resistance grafted just on like the little time frame just so we can trade it. Now I'm going to show y'all how big money and smart concepts use moving averages as support and resistance. When it comes to using the different moving averages and all those are called indicators. So the first thing you're going to do is you're going to go to Trader View. You're going to click on the indicators tab. It looks a little like this. It says indicators, metrics, and strategies. You'll click that. Then you'll go to triple moving averages by available bond. This is the one I use. I'm going to use that. Click it. Real simple. Then you'll see 3 lines on your chart like this. Of course, you're going to want to adjust the chart because these just random mad lines. So what I do is the first moving average I'm going to use for this one is the 21. Then the next is going to be the 50. And last but not least, the 200. And it's already at 200. Okay, and this is what it looks like. I'm going to make my lines a little bit bigger because I don't really fuck with how they be like so damn skinny. I don't really like that. I like my line a little bit bigger so I can see what the hell going on. So I can know what the fuck going on. Boom. Now, as you can see, all we did was post on moving averages. But you can see what the price is doing. The price on the daily time frame, the price then came down and it then hit this support resistance and it bounced all the way up. That's why I say you can use the moving averages as support and resistance. Cause not all the time will the price just go right back to this line. Yeah, it will too. But if you would have been using the moving averages, you can see it hit that line, then it came crashing down back here. This is the 200 moving averages. This green line, that's a 200. See, 200-day moving averages green, 200. It then hit the 200 moving average, and it bounced all the way back up. And this is just a daily time frame. You can use these moving averages on any time frame. But now I'm gonna show y'all the moving averages just I use to find the trend. So now I'm gonna show y'all the special indicator that I use to find the trend. And that would be the non-moving average. So all you want to do for that one, you just go to moving average. You know what I'm saying? Same thing. Then you just click 9. It's already on 9. So I'll just go, we'll make the 9 a black line. We'll make it real thick. Alright, so this is what the non-EMA looks like. The non-moving average is a black line. So what I like to do is, if the price is above the non-moving average, that means it's in the uptrend. But when it's starting to break the non-moving average, like it start going down, that means the trend may be switching. Maybe. You gotta watch out for false breakouts. But that's what I like to use, the non-EMA. If it doesn't cross the non-EMA, I normally hold my price. But once it does cross the non-EMA, I'm gonna think the trend is starting to change. So I may exit, I may stay. That's when I start to look at the price, see if any continuation is going on. So now let's look at the 4-hour time frame to see how we can use these moving averages. Alright, so this is what the moving averages look like right now. You know, so we got 200 is the green, the 9 is the black, and the 20 is probably the purple, and the blue right here is the 50. Now as you can see, it's consolidating right now. What you call this range right here, where it's stuck from here to here, is consolidation. Some traders trade this. Me personally, I wouldn't trade. That's why I have my, you see I got these alerts set for 27,000. So like if it do break, I'll be ready. And if it do break between 29,000, I'll be ready as well. See it don't wait above this. What you call a fall breakout. If I already entered my trade when it went above this, I would have been losing. Cause you see it don't went straight down from there. So like I said, how I always trade, I always wait for the price to go to a moving average. So you see how I just stand right here and keep crossing between all three? I wouldn't even fuck with it. I'd probably wait till this to go below 27,000 and hit either the blue line or just moving average for me to do a potential reversal. Because if it hit one of these, it's more than likely going to bounce up. That's why I always wait for a moving average to be hit. And this is how, another reason how I do it. So if the non-EMA fails and it breaks below the non-EMA, the next moving average up, the 21 moving average. It go through the 21 moving average, the next moving average up is this 50 moving average. See how it bounced off this 50? Then if it go through the 50, the next moving average up to 200. You see how it all goes down? The non-EMA fails, it's 21. That one fails to 50. That one fails 200. You know, pretty simple. Like I said, man, the key to being a profitable trader is to follow the trend. It's your boy K2 Analytics, and I hope y'all learned something in this video. Like for part 2.